Hey guys, it's C and Ragnar from Giving Tree Lending, and today we want to just bring some real life scenarios of what we go through on a day-to-day basis as mortgage originators helping families with their finances. And Ragnar and I, we've been good friends, colleagues for many, many years. Together combined, we have about 30 years of experience. And we're just hoping to bring some value to you guys and share some stories with you guys. Rather than speaking at you and giving you a bunch of loan terms that you may not care about, we figure the best way to reach you and to help you with your homeownership journey is through sharing some real life scenarios with you that can apply to you. So the reason why I have Ragnar here is because Ragnar is that guy that has really, really bizarre stories, okay? I know most of you think when you think of a mortgage or buying a home, it's just a matter of, having a realtor take you out to the home, taking a look at the property, and then submitting some paperwork to the loan officer, and voila, you suddenly have a mortgage and a home at the end. Unfortunately, that path from A to B isn't always a straight line. In fact, most of the time, there's quite a lot of curves in it, right? So with that said, Roger's got a pretty interesting story for us today. I'm gonna go ahead and let him speak, but I think you guys will find some value in this story and maybe take away something that may apply to you and something that you can use. So Ragnar, please share that great story that you told me the other day.
Yeah, thanks, E. And we wanted to launch this the series with this story as we are more or less, in a tougher marketplace, right? It's not a secret right now. Property values are high, interest rates are high, and just getting qualified for financing might be a little bit more difficult than previous years. But just wanted to share the success story, and if you can relate with it, then great. So here's a family, a couple who now are dealing with their mom, their mother who's elderly, and she has some ongoing health concerns. And they're currently about like 45, 50 miles away from each other. And so when I was introduced to them, they wanted to acquire a property like within walking distance to their mom, so that at any given moment, one of the spouses can go over and help her out, take care of her, whatnot. So, so what they were going to do was they wanted to cash out on their current primary residence.
Okay.
It has like a balance of $135,000 or so, but it's worth over $1 million. So they figured, hey, we got a lot of equity. Let's cash out about 25% to do 25% down payment on the new property they're going to acquire. Okay, so they were going to basically leverage the equity from their existing home to purchase a new home. So upon going through the application process, the pre-approval process, I discovered that their price point they were looking at they weren't looking for a bigger home. They were looking for just a smaller condo, price point around $600,000 or so. And that kind of got my team and I, our minds kind of going. And so we're like, you know what? Why don't we look at it this a different way? Why don't you just cash out completely $600,000 instead of 25% and use the funds to then outright buy it in cash, right? And so the borrower naturally goes, well, why would we do that, Ragnar, right? That's a big loan. Well, if you think about it, you're going to have 25% here, right, to inject as a down payment. You still have to qualify for a loan to make up that difference. All you're doing is really getting one loan instead of two loans, right? And so now, what are some of the benefits? And as I told the borrower is, one, you're going to get a better interest rate. Because if you're going to acquire a second property, you might most likely have to acquire it as an investment home, in which case investment home rates are higher than a primary, right? So you get a lower rate, even though it's a cash out. Number two, when it comes to purchasing condo properties, there are additional requirements, unlike a SFR, a single family residence. You'll have to get a condo certification right now because of insurance and reserves. It could pose an issue. So you don't have to deal with that, nor the appraisal, right? And then just other third-party related fees, right? Anytime you go into escrow with financing, there's additional fees that you would incur. So you would incur one through a refinance, one through a purchase. You have essentially double the fees. Here, by way of cash, you can eliminate some of those fees.
Okay, so let me digest that just a little bit, right? So the scenario is elderly mom who's ill. Mm-hmm. Daughter and son-in-law, I assume, right? They're about 40 minutes away from mom. Mm-hmm. Mom's at an age and in a position where she needs to be taken care of, right? Yeah. So daughter, son-in-law, they want to be within walking distance to mom instead of that 40-minute commute, right? Okay, so just to clarify, it's the daughter who is going to be purchasing this new property, not the mom, right?
Correct.
Okay, got it. Okay, so I'm really glad that you brought this story. I love the story because it addresses a lot of issues,
Yeah.
right? So I don't know if you guys know, but in our world, there's something called a reasonableness of occupancy, right? So let's say, for example, if you live on a particular street and 3 homes down, that property becomes, a newly listed property, and you want to buy that property too because you can, right? And you want to. You cannot buy that home as a primary residence because you already have one. Does that make sense? I hope that makes sense. So that's a big issue that we run into. And so, Ragnar, I think your whole purpose of structuring it this way, I mean, you listed a ton of potential issues that was addressed by doing it this way, but now they can go ahead, they don't have, occupancy is not even an issue because they're essentially paying cash, right?
Yes, correct. You are paying cash, so there's no financing guidelines you have to worry about. That said, there is a way to acquire, if they wanted to, really wanted to, there is a way to acquire the new property as a primary residence. And set your current one as a departing residence, but that's something that will require a deeper dive. If you are interested to know, please click the link below or just DM us directly, and we'd love to kind of walk you through that. But yes, by purchasing it in cash, you alleviate all the worries about just the different guidelines there are that can be somewhat restrictive, from occupancy to higher interest rates and so on. Yes.
Got it. And the property that they purchased is a condo.
Correct.
Yeah, I mean, I know with the whole condo certification, which is required for all condos, there's a couple of questions on a condo questionnaire that sometimes the HOA and the property manager are not willing to answer.
Right.
And that creates a problem in our process. Right.
Yeah, absolutely.
So once again, by purchasing the cash and bypassing the financing of it, we don't have to worry about those.
Yeah,
right?
exactly.
No, that's great. That's wonderful. I do have a few questions for you. Okay, so you obviously we addressed the question of the occupancy, right? It's not their primary residence because they already have one, and because they're paying cash, it doesn't really matter if it's considered a second or investment property. Right. And the beauty of it, obviously, as you mentioned earlier, is with investment property, the interest rate's higher because it's considered higher risk.
Yes,
right.
correct.
Okay, great. Okay. So initially, you were tinkering with the idea of just pulling out the 25% down payment from their primary residence as down payment. But what made you and your team think about just doing a full cash out?
Yeah. So when you work with me and my team, us, we're not going to just approach. Right. We understand that there is an objective for the clients, right? Whether it's to buy the home, but it's obviously to purchase the home, but we don't want to approach it very linearly. Right? There's always going to be multiple solutions. And so when we take on clients and we look at a file, we're going to look at it from many different angles, right? And our job isn't to maximize profit here, really. It's to maximize and the best financial outcome for our clients, right? And so you can only do that by looking at, you can't achieve that by just looking at something very linearly, right? So that's what we do. That's our job. That's what we do.
Got it. I think another advantage of making a cash offer, buying cash, is we're still in a really competitive market.
We are,
right.
Yeah.
Supply's still low, demand's still high, right? And when there's a listing and the listing agent's getting 15, 20 offers, right? Would you say that they put the cash offers on top?
Yeah.
Because it just eliminates so much of the headache.
Correct.
Right.
Yeah. Okay. The potential of fallouts, right? Going through a mortgage.
Got it. Okay. I like what you said. That we're not. The way we think and the way we proceed, with our clients is to truly help them, right? Do me a favor. Let's pretend that you went with Plan A, right? Paint me a picture of what that would look like, right? So what I mean by that is the initial plan of pulling the down payment,
right?
Like share with us what that looks like, what the process looks like, right? The cost involved, and what the borrowers would actually end up with at the end of the day, right? With multiple financing.
So in this case, it was very fortunate that the clients had enough equity to pull out the necessary amount of funds to acquire it in cash, right? But if they went with the 25% down payment, so there's a few things here. I'll outline that. Number one, so they'll have to qualify on their current existing first mortgage. There's a payment, right, that's associated to that.
Yes.
Then they would have to qualify not only on that payment alone, but also the amount that they cashed out.
Got
right.
it.
Whether that's a second loan, and so there's 2 loans on that existing property, current residence, or if they decided to cash out, refinance into one loan, which would make it a higher payment,
Just to clarify, so in your scenario, you're talking their existing home, they already have a first mortgage.
Yes,
on it,
correct.
right?
Yeah.
So for them to pull out equity of that home, they have two options.
Yes.
They can refinance the first and
Correct.
pull out the additional money.
Yes.
Or they can get a second lien
Correct.
that goes behind the first.
Yes, that is
got
correct.
It.
Yep.
Okay.
But either way, it's gonna increase their monthly payment.
Of
right?
course.
So what they would have to qualify on that payment plus any additional, car payments, credit cards, school loans, and then the payment on the new investment property.
Got it.
Right.
Okay.
Now, on the new investment property, it's easier to qualify actually because they will use market rent to. So let's just say the new proposed payment or the new mortgage payment on the property that's going to be acquired is going to be $3,000. Okay. Let's say the market rents go for $3,000. It won't completely negate it, but so they'll take 75% of the market value. So 75% of 3,000 is 2,250. So 2,250 subtract the 3,000. So it'll actually be only $750 that'll be factored into the ratios.
Got it.
As a net loss on that property,
Okay.
as opposed to the full.
So
3,000.
that 750 will actually go against them
Correct.
for the purpose
Correct.
of income qualification.
Yes, correct.
Okay.
Correct.
Okay. Got it.
And then of course it would have to go through condo certification, appraisals, right? When you open escrow, there are third-party fees, right? Title escrow, notary fee, document fees, recording fees with the county, tax fees, whatnot. So depending on the county you're in and who with third-party affiliates are involved, you're looking at somewhere like let's just say $10,000-$15,000, right? So that's and of that $10,000-$15,000 or so, a majority of it because they financed it in cash, they didn't have to. It wasn't a cost that was incurred to them.
Got it. Now, at Giving Tree, we close fast anyways,
Yeah.
right? So even if we did go with scenario A, where we're pulling 25% out of the current primary property, and it's still getting a separate loan to finance the 75% of the new property, we could still done it in record time.
Yeah.
But just having cash in hand just gives you that confidence.
Well, so here's a cool part of the story is a week into refinancing or cashing out, they got themselves into escrow on a 10-day escrow.
Oh my gosh.
Yeah. Fortunately, they did this a week into our refinance.
Oh, okay.
Yeah, so the transaction altogether took about 17 days.
Okay.
It really could have been a little bit quicker, but there was some hesitation on which way they were going to go.
Of course.
But we got it done. So they got into escrow 7 days within our refinance. There's a 10-day closing. We funded on the 17th day. Escrow wired the funds to the other escrow, and they were able to acquire the property.
Everybody's happy.
Everybody's happy.
That's
yeah,
beautiful.
it worked out.
That's beautiful.
Yeah, it worked out. Yeah.
No, I think that's great. What would you say your biggest takeaway is, with this experience, right? And maybe it's something we could share with others as far as how you have the ability, you and your team have this ability to structure something, right? To just eliminate a lot of the unnecessary nonsense, right? And in the process of purchasing a home, what would be your biggest takeaway?
Biggest takeaway regarding the actual transaction, or
I would just say the biggest takeaway from this experience.
Experience,
right?
yeah.
Like for example, the decision that you ultimately made to go with pulling all of the cash out and buying cash.
Yeah.
Like share with me what your takeaway is.
That's a good question. I guess for the audience, the biggest takeaway for me would be the importance of being a homeowner.
Okay.
Just owning at least one property. And the reason why I say that is because when you own that one property, right, whether you love it, you want, obviously we want bigger and better things, but just to have that one, maybe not now, but maybe in 5 years or 10 years, or maybe at retirement age, it's okay to look at that one property as a bank, as a credit card, but a super credit card.
Like
right?
an ATM machine.
Like an ATM machine, right? Like where can you, for this couple here, where can you go and borrow $600,000 at a rate of like sub 7%?
Wow.
What are credit card rates right now? 22,
24
24
on average,
27, right? Where can you borrow money for 6%, under 7%? We hope to see rates come down, so it might be 5% or 4%, but where you can't. And so being a homeowner gives you that option. It gives you that that power to be able to access a liquidity for to acquire more property or to finance your retirement. And so I learned through this, that's what my message to my audience would be, our audience would be, is just that one property. I know a lot of us want to think about I want that dream home. You know what? That's great. I hope you can achieve it. But I think more so for down the road, it's so much more important just to have this one property that's going to give you some options down the road.
I love that explanation. You know, I think a lot of people out there who are tinkering with the idea of home ownership, you know, they're just not sure. I don't think they see the true value of home ownership. I think for them it's just shelter, right? It's a place to live, right? Because the apartment I've been renting for the last 10 years, it sucks, right? And the landlord's always raising rents and there's always repairs. Don't see it as shelter, would you say?
Right.
But see it as an investment that quickly repays you,
Yeah.
right?
Yeah.
Building wealth,
Yeah,
right?
exactly.
I think the story would have been very different for your clients if, you know, you and your team didn't decide to structure things the way it was,
Yeah.
because they would have dealt with a lot of headaches. Not to say that it wouldn't get done,
Yeah.
but
Well, we sure would have been able to meet a 10-day closing.
I agree. I agree.
Yeah.
But I think more importantly, right? I think the goal here at Giving Tree and the philosophy that Robert and I both have is, hey, look, we're going to get you from point A to point B. It's not going to be a straight line. I'm letting you know right now. Anyone that tells you it's going to be a straight line, they're lying to you. Okay, but how do we minimize the peaks and valleys, right? We want to try to keep it as straight as possible without too much of a peak and valley. I think that's the goal here. So I think Giving Tree does a tremendous job. If there's one thing that we're super good at, it's structuring the loan and just taking you down the path of least resistance, right? Anything else you want to add?
What else could I add? I mean, the borrowers at the end were happy. I forgot to mention that they did like the idea of just having to manage one payment as opposed to two mortgages, or actually potentially even three if they went with a line of credit. So, you know, there's a convenience factor there.
Sure.
But yeah, here at Giving Tree, we, you know, this could be for another segment, but, you know, we are a direct lender too, so we do control the process of the loan file, and that's why we were able to get it done so fast.
Got it.
Yeah,
Okay.
yeah. So,
Okay.
yeah.
I would say more importantly, right? Obviously, you were able to take them down a path which was cost effective,
Yeah.
less headache.
Yeah.
But ultimately, what it accomplished was, you know, bring mom closer.
Yeah,
Like,
yeah.
man, you know, elderly, ill, 40 minutes away, commuting. Man, the peace of mind that and the comfort,
Absolutely.
right? Having mom just a few steps away.
Yep.
I mean, that's priceless.
Yes.
That's priceless. And I think you were able to accomplish it in a very effective way. So thank you again for sharing that. I really, truly appreciate that story. I think a lot of people out there can relate to this, right? Especially people our age. Our parents are reaching that level. You know, it is what it is. We're all going to go through it. But just know that there's solutions out there for you, right? If you own a home, great. We can explore the equity options. If you don't own a home, like Robert says, everybody should own one,
Yeah,
right?
yeah.
Reach out to us and we'll show you how to get one, right? Like I said, it's never a straight line from point A to point B, but we'll definitely mitigate those peaks and valleys as best for you as possible. So if you guys like this content, if you like what we're talking about, if you like the stories, you know, please continue to stay tuned. We will be producing more and sharing more stories, and trust me, between the two of us of you know, over 30 years of experience, we have a ton of stories to share. And they're unique and some are bizarre, but they're real.
Yeah.
They're real. It happens to a lot more people than you think. You know, the process is not as pretty as everybody likes to paint it, right? But it's also not going to kill you, right? But equip yourself, arm yourself with the right specialists, with the right experts. That's going to take you through that journey and really help you achieve with what you're looking to establish.
Awesome.
All good?
Yeah, all good.
All right. Well,
Thanks.
thank you so much, guys.